Welcome to the Clinton Donnelly Show. Today we're going to be talking to Jamar James, who is a professional trader. What secrets could you share about how to live the trader lifestyle?
80% of my time is spent researching and analysis with other traders. We really don't have a nervous energy because at the end of the day, the market only goes up or down. We're seeing more and more institutions come in. It's almost now becoming like Wall Street. Crypto traders used to love, saying that, hey, we're degens and, we want to have this freedom. But as we see the freedom shrinking, one of the reasons I'm here with you is that part of trading is that I can't trade stressed out. I need to have a peace of mind. And one less thing I worry about is the IRS man sending letters.
Please tell us, Jamar, about your life as a professional trader and a little bit about what you do.
Hey, how you doing, Clint? I'm happy to be here. Thank you for inviting me. I've actually been a trader for the last 12 years. It's kind of unique. A lot of people they never really meet a real trader, and I've been having a mastermind for the last 7 years of full of traders from all over the world. We come together and we share trading strategies, trading ideas, and we really have a strong belief in the family values, the freedom, and then making money in all the financial markets. I trade stocks, options, futures, and crypto. Um, you know, I'm independent. I used to have a license, Series C3 and C6 a while back, about 15 years ago. I left the licenses alone, and now I trade my own money.
Well, you're the real deal. I mean, you actually are living off your trading lifestyle and growing your wealth at the same time. A lot of people live off their trading lifestyle and squander it, so you're, which is really, I've done, I took a piece of my life. I did some day trading and realized it
Okay.
wasn't my skill set. But one of the challenging things that I've seen with traders is that there's so much nervous energy that you get into watching, is it going up, is it going down, that it consumes all the other areas of your life. And I know guys, like, they're going out to party with people, they're checking the prices of the stocks. I mean, like,
Right.
you can't disengage from this nervous tension. It becomes like a high, to get into that nervous tension. You don't really know what to do on the weekend, what's going on in Japan. you know how do
Right.
you balance those things? I mean, when you're in it for you're a professional trader for the long haul, not just a 1 or 2 year bull market trader. I mean, you've been through the thick and the thin. What
Right.
secrets could you share about how to live the trader lifestyle?
Well, see, that's one of the most, the thing that you just mentioned about the nervous energy and the checking your phone all the time. 80% of my time is spent researching and analysis with other traders, and that energy, on the retail side, that is normally a person that comes in and they're risking money. We really don't have a nervous energy because at the end of the day, the market only goes up or down, and so you have time. And I think the time in the market and having the analysis, it gives you a little bit of peace knowing that I'm not going to be up all the time and I'm not going to be down all the time. The market moves up and down, and the risks. Some people risk too much where it causes them to have this nervous energy. For us, we know we're in it for the long term. I treat my money as I have a background. I used to be a Marine, and once a Marine, always a Marine, and I treat my money just like I treat the soldiers and my troops. I want to protect them, and so risk management is one of the biggest you know um, focuses on trading. That's first, and so I'm never risking too much to have that nervous energy. And then secondly, it's the time. Time is more important than money. Just in life in general, that's one of the things that we stress over. We want to have the time freedom, and so that time freedom comes with a peace of mind, knowing that you know I've done my research analysis. I'm never going to be 100% right all the time, but if I can get those probabilities up to 90%, I know that I'm going to be okay over the long run. And same thing with having that peace of mind in the market. It is I have there's three things that all markets have. I don't care if you trade crypto, stocks, options, futures. They all have volume. There's always a sentiment, and you always have the time, right? You can get in if you get in crypto at the right time, you don't worry. If you get in a stock that's low at the right time, you don't worry. And then if you start seeing volume, you know that the price is being pushed up, or if you see volume going out, you see the volume being pushed down. So trading isn't as difficult as people think. I've been in the Marine Corps, working with people, and our lives are at risk, right? Flying helicopters and being out in the field. You know, we could possibly die. In the market, you can't. You only can lose money or make it. Being in, I owned a real estate company, and one of the biggest threats I had, outside of making money, to me, it was the IRS.
That's so true. I think a lot of people ignore their taxes and they pretend it doesn't exist. They wait till it's to the very end. But, you know, everybody should be paying taxes, and taxes can be big. I mean, especially with capital gains, state and local, added to your federal. I mean, it could be taking a third of your profits. So depending upon where you live, and so you really need to be thinking about it all the time. If you don't think about that until the very end of the year, then what you're doing is you're trading with your tax money, and hopefully
Right,
you win. But if you lose, you're compounding a problem you have with the tax man, and that just
right.
starts to be, that is one thing that'll rob people of their peace at night. I mean, we
Well,
defend people in audits all the time, and and
right.
the fear and the terror they experience just laying in bed at night over what could happen is just terrifying. So it's best,
Yeah,
if you plan right in the military, right, it's all about planning ahead of time and then
right.
executing. So
Well, I think one of the, for our focus, a lot of people focus, entrepreneurs, business guys, traders. We really focus. We want to focus our energy on making money, right? We the more money we have, the less we worry. Same thing when I was in real estate, and sometime we so focused on making money, we're not that focused on preserving it from, to me, um, a tax strategy is better than a tax bill. And so, as a trader, I want to set that up as well. I want to find a way to keep as much as possible. And that's one of the benefits, and that's one of the reasons I'm here with you, is that you know part of trading is that I can't trade stressed out. I need to have a peace of mind. And one less thing I want to worry about is the IRS, man, sending letters, because I know that in 2024 they didn't hire all these IRS agents. I'm also in crypto, and for the crypto guys, a lot of those guys in that environment, they've made, in my environment, they made so much money, and the last thing they're thinking about is how much Uncle Sam wants or how much they should have paid, because it's changed. The regulations, the rules have changed so much. And then we have others that are so stressed out that they have this money, but they're scared to spend it, they're scared to do anything, because they're like, well, I don't know how much I have to give up. And that is when, having a resource, having a service that is going to at least give us a heads up. I like to think, as a Marine, I'm realistic. I know that we are going to get old, and we're all going to get older. And as we get closer, right, I do more tests and more physicals. They just told me that, hey, man, you're getting up there. You may need to come in for a colon and prostate exam. And I'm like, man, I'm at that age, but it's better to catch it early, right?
we're not going there.
But that's the reality, and I think that's most people. They don't want to go there, right? They want to push it off and say, you know what, I'll deal with it when I have to. I don't want to have to deal with the IRS when I have to. I want to be as proactive as possible, especially when I'm one of the guys that are, I'm dealing with money all the time, and I need my troops. I need as much as possible.
Well, and from a taxing point of view, those sort of tests you talked about, tax from a trading point of view, those are really like, you think of those as indicators, sentiment indicators for your body. Just if you put it in perspective, you don't have to be looking at them all the time, but you just like, okay, this is going up, this is going down, this is in the right range, and we monitor ourselves. When it comes to taxes, I mean, it is with cryptos is so tough. It's also true for people who trade non-crypto things, especially if you're not on a brokerage. And even if you
Right.
are on a brokerage, it can be challenging because of a brokerage. If you trade on a brokerage, you buy Google, you sell Google, all in the same. brokerage. At the end of the
Right.
year, you'll get a 1099 saying, you bought 10,000 and you sold it for 12,000, you had a $2,000 gain. So like the documentation, the calculation is all done for you. But you don't really know what that number is typically until the end of the year, because
Right.
unless your brokerage is really helpful to you. But with other investments, like if you have private placement, nobody's tracking what you bought that for. And this is very true in crypto. Nobody's tracking what you bought it for. Nobody knows what you sold it for.
Right.
It's up to you. And the challenge comes in is, well, you just don't know how much gain you had. You bought some stuff, you sold some stuff, had some winners, had some losers. You don't really know what your total gain is. Although in my experience dealing with traders all the time, at the end of the year, I ask them, gut feeling, how much money do you think you made? And I've had guys, massive traders, guess up front, right in on the money. I mean, they have a good. I mean, a lot of trades do nothing. They just went
Right.
sideways. And so
Right.
what we do is we remember the winners and remember the losers, and we keep a kind of a running score. Now that's what most people do, but they don't set it aside. Now the tax law requires us to pay estimated taxes on
Right.
our income on a quarterly basis as we earn the income. The challenge we have as a trader is that sometimes that income is negative. All right. So I don't necessarily want to pay for all my first quarter gains, as estimated taxes, if my second quarter is going to be a loss, because then I probably would have held back some. So there's a little bit of a dance that goes on as you're coming into the fourth quarter, where those payments are due January 15th for people,
Right.
and you want to have a pretty good sense of where that is. Now, how are you going to do that? All right, you don't have your 1099s from the brokerages yet. You have things you've bought off exchange where you have to calculate your gains and wins. The best way to do that is to keep some sort of journal. Now, I'm sure
Right.
in your mastermind group, there's guys that have all different ways of keeping a journal, whether it's
Right.
a spreadsheet or whatever they're tracking. In terms of true, if you're managing your investment, you kind of want to know what I came in at, what I went out at, so I can look back and
Right.
calculate, was that good? The retrospective view of things. So you need to take that and capture your gain, and you need to look at where you're at now. Coming into this fourth quarter, we have the opportunity with some investments to do uh, tax loss harvesting, which is
Right.
basically cashing out your losers to offset your gains. Now, if you
Right.
have a net loss, well, that's no purpose in that. But so tax loss harvesting, for people who aren't sure about it, is basically a wash sale. And wash sale section 1091 of the tax code says that if you sell something for less, you take a loss, but then you buy it back 30 days before or after the sale date, then
Right.
you're deprived of that loss. That's a really harsh tax. I really don't like that. I think that's punishing behavior. I think that's real.
Yeah.
But that's the law. However, that does not apply to cryptocurrencies at this time. So you can do this in crypto. Now you can offset. You can
You can
have
do it
gains.
same day.
Yeah, you can have gains in stock. All right, you want to reduce your tax liability. You can take losers on your crypto. They can, it can be cross asset, so to speak.
Yeah. So I mean that's you know a lot of retail traders don't understand that because they don't get to talk to tax professionals and understand, or in our mastermind we understand that when the crypto was low, we were all selling, to take our losses, to gain those losses at that point, and then we buy it back.
Right.
And we didn't plan on selling it until next year, and so we've taken losses strategically, right? When we sold when we're down, knowing that this is going to go back up huge. And one of the things that you mentioned is in crypto it's easy to have a portfolio. You'll keep funds in one wallet and you'll track it for that month. So a lot of traders, they'll move 10 or 20,000 into an account, and that's how they keep track of their profits and losses. They'll have a portfolio in the wallet. They'll move money in to one wallet, and they'll trade off of that one wallet for that month. And at the end of the month, up or down, they'll know how much they lost or how much they gained because they move money in at the beginning of the month. And it's a lot of times we'll keep track of it monthly. And so every month you'll have a profit and loss statement for that crypto account. If you're trading, if you're really trading, some people are doing staking, some people are buying NFTs. They're investing in multiple different things. But like you were saying, it when a trader goes DeFi, which is decentralized finance, that means they're not trading off a centralized exchange such as Coinbase or Gemini. When they go DeFi, they're trading off a smart contract in their wallet. And this is where you use something like MetaMask portfolio that will track that wallet, and then it'll track all your trades. And so this makes it easy for your, tax professional, your tax team, to report and actually capture. Because one of the things that I've seen happen for traders that was an error. Coinbase were, for instance, sending things over to the IRS. They would say, "Hey, you know, this trader bought these crypto coins and it was at this price, but at the end of the year, they'll send a statement over and says, hey, this is how much it's worth now." And really, the crypto was worth a lot less. And so some people were getting tax bills for 200, 300,000 when they really only made 50,000, or they only made 20,000. Some of them
Mhm.
were even at a loss. And that's where, I've seen people get audited, that's traders, and they're like, "There's no way that I had this much in crypto." But they will say something like they didn't click on that they had crypto, and then our Coinbase will send over, their records, and then they get flagged. Then they go through this audit. They're saying that, oh no, you had a reported gain of 300,000, and they have to disclose that, no, I only have like 40,000. And so these are the type of situations that I've seen a trader, become very stressful and just shut down for a month or 2 months at a time while they're going through the IRS because they're mentally, you know, just out of it. It's hard to trade when you have a debt. You think you owe 300,000, and you only made 40. For some people.
Oh yeah. Well, you're absolutely right. IRS is paralyzing to people. I mean, the fear machine. So many people they get letters from the IRS that don't even open them up. I mean, the fear is so great. And these are serious letters. Hey, I came back from a conference last month, October, uh, with the IRS commissioner was there, was with all the IRS electronic filing staff, and they were just talking about the trends. And the big trend for the IRS right now is increased enforcement. They got $46 billion from Congress to crack down on, well, to increase enforcement. And specifically, one of the areas they're going after is digital assets. They have this thing they call the tax gap, that there's a gap of how many people aren't paying enough taxes, and they think the key culprits are wealthy investors. So you've probably heard this in the news. The
Wow.
IRS is auditing wealthier people. Now we've looked at that and what they've said and where the IRS is at from their statistics point of view. And what they're saying is they're not going to increase the historic audit rates on people uh, that make less than $400,000. I mean, the president said this, IRS commissioners, Janice Yellen, they're all like in lockstep. We're not increasing people beyond the historic rates for under 400,000. Well, first of all, let's talk about that. IRS has been financially hobbled for the last decade, and their audit rates are at all-time lows. Okay, so
Wow.
when they say we're not going to audit you more than historic levels, historic levels, we go back to 2010, and even earlier. I can't get the data before 2010, but basically at almost all levels, you're looking at 2 to 4 times more audits for people. Now they did say that they're going to reduce the number of audits on people that are in the lower income area, which typically were child tax credits, earned income
Right.
credits, where there's a lot of fraud. All right, so they're going to they're easing off on that, but they're going to crack down on wealthier people. But their issue of wealth is measured not in terms of adjusted, your total income, but in terms of total positive income. This is not the same thing as what you and I think of as income. All right. It's positive income is your income without expenses. Okay.
Okay.
Now, if you're a W 2, this doesn't matter. Income equals positive income. But as a trader, you experience income when you sell something. Okay. But
Right.
you have an expense, the price you bought it for. So so total positive income is all the value of all the things you sold during the year. If how active a trader you are, this could be millions, all right, maybe tens of millions. You
You're
may not
starting
have
to scare
made
me.
money. Yeah, because
Stop
it's just a
scaring me.
yeah. This is where they're at now. What we learned at the conference, they talked about the IRS has done a lot of things at this point in time, especially for crypto people. You should just assume the IRS knows about all your trading activity in the US on any US exchange, which tends to be an on and off ramp for most people in the crypto space. They have all the transaction records. We just had a guy got audited for transactions that he did on local Bitcoin where he traded with somebody else in Venezuela.
Oh wow.
The IRS got really excited because Venezuela has like hyperinflated currencies, and so nobody trades on the official currency rate. They trade at like the street price, which is a fraction of the official rate. And so they thought this guy was making millions. In reality, he made about $2,000. So but they thought he made millions, and we had to I had to escalate to management and say, look, time out. This currency is hyperinflated. You can't use it. And you got to look at it in terms of dollar values, not in terms of Venezuelan bolivars. The IRS knows who all the crypto traders are. All right, they have your trading history. They know if you bought or sold on the U.S. exchanges. Now, of course, if you're doing stuff on DeFi, they may not know that. With the scope of that, they might know you did some activity, but not necessarily the scope of it. If you're trading on foreign exchanges, they know some, but not all foreign exchanges. I mean, at this point in time, we can all pretty much understand that Binance is over a barrel with the IRS. So
Right.
rest assured, the IRS is getting Binance trading records. All right, it's not just a given.
Right.
Uh, and if they're not giving it to the U.S., they're giving it to Australia, and then the U.S. will get them from Australia. So uh, there's no hiding. So on the tax return, especially if you're coming to tax season, there is a question right after your name and address. This is how important it is. Did you buy, sell, send, receive, or have any financial dealings with cryptocurrencies? I didn't quote it exactly right, but yes or no. If you did, check yes. There's
Right.
no downside to checking yes. You get into problems if you check no, because they know when it's yes. All right,
Right.
just don't even go there. And you're just like basically waving a red flag, saying I'm trying to hide something. If you don't say yes, all right. So this is one thing. A lot of people. We laugh, but Jamar, I have guys who are like, I didn't file my crypto. I didn't report my crypto 2 years ago, and so last year I didn't check yes because then they would realize why didn't I report it the year before? And so they kind of like go into this downward spiral of hiding,
Right.
in terms of like living a lifestyle of peace and rest. Well, that's just ratcheting up your long-term anxiety, higher and
Yeah.
higher. You know,
Yeah, you don't
uh,
want to have that thought of everything is going well, and then all of a sudden you get a storm behind you, and they have IRS guys coming. A lot of people have never been audited, and for a lot of the crypto guys, when you go through an audit, you still any money that you moved over and converted from crypto, and you moved to your bank account, the records are 100% there. There's no hiding, and I know DeFi and CFO and centralized exchanges. There's no hiding your crypto because even if you received it from someone else that they never hit it, you're linked to other people. So crypto creates a chain, and they have chain analysis. Coinbase, Binance, the government, any wallet that you have connected. If you move from exchange and you move it to your wallet, and then you cash it out, you're there on the blockchain forever.
it's like digital fingerprints. You can't erase them. Uh,
Right.
we were just having a discussion with my tax resolution manager, about a guy who was a crypto trader, and he had his parents buy a lot of Bitcoin. I think there's like 30 Bitcoin, and he bought a Bitcoin, and then he managed the trading of all this. And as a unified account, allegedly they had a LLC that they held these in. Then he was taking profits from that to himself in 2020 and 21, and then in 22 it went south, and everything got lost. He lost everything, and his parents had to sell their house to pay for the loan that they took out to buy the 30 Bitcoin.
Oh, wow.
Really ugly. So then he gets audited, right? And he thinks he's smart. He thinks he can buffalo the IRS into stuff. So the next thing you know, the IRS has audited him and his father, and they're into a massive assessment. I think it was in the neighborhood of over $1 million in taxes. And at that point in time, he contacts us to help him get an offer and compromise with the IRS, which is basically a cut a deal in terms of, for settle for less. Of course, Typically, for most traders, that's not an acceptable approach because you're going to have to give up all the equity you have. The auditor now, because of the suspicious behavior for 20 and 21, he's now going into 22. And we're having to represent him on his 2022 audit. He had done his own representation on 2020 and 21. Well, now all of a sudden he starts producing documents like, oh, here's an LLC document from
Oh
a
wow.
couple of years ago. I never gave this to the IRS, but we need to use this to spread out the the distribution of the profits. So my resolution manager goes, "Did you file tax returns on this LLC?" Oh, no, no. Well, we're gonna have to do that because they're gonna come after it. And oh, by the way, your prior returns that you did in 2021, those are fraudulently bad because you haven't even disclosed this business income. Oh no, I didn't. I didn't disclose it. And so key takeaway from all this is if you get audited, you might be a smart guy, an incredibly smart guy when it comes to trading, but you're out of your skill set when it comes to dealing
Right.
with auditors. They don't think the way you do. It's kind of like that old TV show Columbo. They just keep on asking questions, and they come by in a circuitous manner, and they will find out the people are trying to be smart. When it comes to the IRS, everybody needs to have a professional in your back pocket that you can rely on to defend you, especially as a trader.
Yeah, no, I 100% agree, and that's why for us in our environment, I have guys living in Thailand and different places, but they're all U.S. citizens, and they're living all over the world. We say freedom is a big part of it. I was like, you don't want to have to deal with these, setbacks and anchors. I'd rather have professionals, even for myself, represent me because at the end of the day, we try to do everything right. But the questions that they ask, you don't know what you're saying. And, to me, it is, you can have all the money in the world, but if you don't have peace and you're not free to travel and leave when you want, that's a big reason I trade. I wanted to have that freedom to spend with my kids and take vacations. Um, and the IRS is one of the, I went through an audit back in 2012, or 2000. It started in 2010. Then 2012, it really, 2 years later, they really maximized, and then all of a sudden they went through other years, 2009, 2010, 2011, and I had to deal with them for about 3 years. And I was like, man, that's 3 years of my life I can never get back. And
Oh yeah.
right, and so I know how important the peace of mind and time is. It is, as a trader, we're already in a environment that fluctuates on a daily, and so our energy is spent in trading. We make a lot of money, but we also have to be sharp and trying to reduce the stress. I think it is a beautiful service that you guys have, and that's why I was happy to be on this podcast and share, because it's one side of trading that a lot of people don't talk about.
Oh, and it's so big. I mean, people have destroyed their lives by ignoring taxes. I mean, like I know guys who call me up. They go, "I got a problem with my taxes." They had put a lot of money in a bull market. It went up. They took all the profits, plowed it into additional investments, possibly highly speculative investments. Then, when they collapsed and crashed, then they usually the following year. Now all of a sudden they're out to do their taxes, and they realize they made a fortune on the one year, but they're not in a position to pay any taxes on it because in the second year they lost it all. And the IRS doesn't care that you lost it all. You owe taxes on the first year, and so they
Okay.
get into like a real deep debt situation and owing the IRS money in a position that really gets them into having debt and long term payment plans with the IRS, which all because they tried to make some profit and lost. So it's you need to plan. You need to be, and it's really great that we're having this conversation because most crypto investors, this is like the first thing that they've ever bought. They other than going to college, they bought some cryptos, and that's their first entry into the investment world. It's also their first entry into taxes of a
Right.
big world. And it's so important that you and I have this conversation just to think about, uh, living your life in a peaceful manner, having balance, and
Right.
juggling those responsibilities in a balanced way.
Yeah, I mean, it's a big difference because I have a TD Ameritrade, Charles Schwab, we trade there. A lot of the work is done for us. When we're trading stocks and options and futures, all the work is done for us as far as, how much we've made in profit and losses. In crypto, there's nothing. There's no records that you have. and that's where a lot of guys get in trouble. It's almost like they just ignore it. I mean, hey, you're going to save a lot of guys in my community, and the traders here. We can focus on making money, while we'll have you on the back on the backside.
Well, absolutely. Tell me, what are your thoughts about? I mean, you look at different. You've been in this market in trading for many years,
Right.
and a lot of people in the crypto space are getting excited. They feel like the bull market is back. Now, maybe is that just newbie excitement, or do you see, as you look at the market, is there really
Well,
is this a genuine turnaround? Is this something that people start to maybe trend trade?
no, I mean, 1,000%. I mean, if you just look at what we've been through, COVID, and we've been through, a new president, we've been through an economy with high inflation, and the stock market has had its highest November since 2002 today, right? Going into November was one of the best Novembers we've had in 20 years. And now we look at crypto, and we look at all the institutions getting in. The Bitcoin ETF is pretty much going to get approved. We have Bitcoin halving coming up in the summer of 2024, and everything is still cheap. Everything is still low. To me, this is the beginning. We're still early, and this is still the beginning of the market. I mean, we have a lot of assets that are down, 50%, 70%. Some projects will never come back. The best thing that people can do is be around active traders, because listen to your neighbor, listen to the person next door. They read articles, um, and they really don't understand the real volume. And so, to me, this is the beginning, because the volume is, at our height, we're at almost 2.7 trillion, almost three trillion in crypto assets. Right now, we're at 1.4. So we're not even halfway at the same volume that we had at the height of Bitcoin and crypto, right? We have new money coming in, but it's institution money, and so everything is a lot more regulated. They're removing on ramps. They're removing exchanges. Last month, CME replaced Bitcoin or Binance as the leader in futures. So the Chicago Mercantile Exchange Group is they have more volume than Binance, which for the last 4 or 5 years, Binance was the top exchange in the world. And now we have a regulated futures exchange that is the number one in volume. And so, we're seeing more and more institutions come in, which it's almost now becoming like Wall Street. The crypto traders used to love, saying that, hey, we're degens, and we want to have this freedom. But as we see the freedom shrinking, we see the volume increasing, and we see the opportunity to make money in crypto in a regulated environment much higher. And for me, I've been in crypto, I've been in trading, I've seen a lot of changes. I think even in the stock market, we're going to a 24-hour stock market, because crypto is 24 hours. And so the money is flowing in, and it's flowing in different markets. We're in a global economy. We're in a one world economy, I believe. Things that happen in Asia impacts us here in the United States, vice versa. So, I think the old way of thinking about the markets and the economy, there's a new economy, and there's a new, way to generate wealth. And for a lot of us, I mean, inside of our community, we have a guys that trade the London. We have guys that trade the Australian markets. We have guys that trade early in the morning. It's not just trading the U.S. stock market anymore. It is trading the different markets around the world, because money is flowing 24/7. So yes, to answer your question, 1,000%. This is just the start of a new bull market in crypto, and it's a new market. It's not the same one in 2017. It is not 2020. 2024 will be an entirely different market, because you have PayPal, you have Venmo, you have Cash App, you have Stripe, all these different payment processors. I call them the new banks. They're accepting crypto, right? And now you have small business, large businesses. They're all getting involved in the digital asset world. You have Starbucks with a rewards program. They collect more money in their rewards program than some regional banks. and they're a private company, right? So yeah, this world is different. It's not the same economy, and it creates opportunity for the average investor now. The retail guy has more resources available than he's ever had in history to actually trade with the big boys.
Well,
So
that is so inspirational, Tamar. That's really encouraging. That's really great advice. It's a totally different market for 2020. I agree with you. The regulated space is where it's going to be significant growth in demand. The trading volumes in the regulated space within a couple years is going to exceed the unregulated space.
1,000%. We already see it and you feel it. There's no we have visibility to every dollar that comes into crypto, and it's on the blockchain. So we can see a $1 billion increase in a day, and we can actually track it and flow it in and say, hey, money is coming in. And it gives the retail trader, it gives the average person a huge advantage because it's easy to get 5 or 10,000 into the market. It's hard to get $1 billion in the market without impacting the price. So we're able to get in and out, with gains, in hours, whereas they can't even get their money. It took MicroStrategy, I think it took them 30 days. They were buying $1 million of crypto a day because they didn't want price to shoot up so fast. So it took them over 30 days to get 30 million into the market.
Wow, that's exciting. That's exciting. Well, hey, I'm looking forward to more conversations together. We look to have just be a regular feature on our show, and your insights I think will be really encouraging for everyone because you have such experience, such well-rounded view of the entire market and the lifestyle of a trader. It's just thank you so much for this first interview, and everyone, please like, share, follow. Thank you so much, and happy trading. And as always, taxes are sexy.
Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. You have tax questions that we can apply to. We will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.